Okay, everyone. So I am joined by Vishal Arora with PanCosmic Capital, and we were just about to get into it, and I decided, okay, let's go live and just start because it was getting really juicy, and I wanted to make sure the record button was on before we got into it. So you were saying that you were born in India, right?
Yes, I was born in India and I grew up in a very small place called Meerut, which is close to New Delhi, the capital of the country. And yeah, for the first 18 years of my life, I was in India. And there is an examination that is held in class 10th, which is ICSE board examinations, which is for the first time you get evaluated with all of your peers throughout the country in a centralized board examination. And yeah, I did extremely well in that exam. I had 96 percentage marks and 99 in maths, 99 in science. Um, and suddenly I was catapulted into a different league, which I wasn't very prepared for. Everyone had like super high expectations around what I'm going to do next. And people who typically come from a science background generally in India go for a couple of things. Either they become an engineer or they go ahead and become doctors. And for some reason, that was not my gig. I wanted to do something very different, didn't want to be a part of the herd. And I had a conversation with my math teacher at that point of time. I was just innocent student, asked him, what do people who do well in science do besides becoming an engineer or a doctor? And he just some shot out at the hour that they become investment bankers. And they kind of got stuck with me. And since that day, I badly wanted to be in investment banking. I was just that stupid. And so I carved out my career and carved out my path. Came from a very humble background. Parents couldn't afford excessively high tuition fees in the United States. So went to a school called William Patterson University in New Jersey. And the reason I chose that school, one, obviously they were giving me full scholarship, but most importantly, it was close to New York, which was the hub of the financial world. And I had this notion in my mind that I wanted to be an investment banker. There's nothing else that I wanted to do in life. And I remember life in the United States was extremely tough. I never experienced a life where you had to take care of absolutely every single thing. You had to pay rent, you had to take care of your own expenses. So I remember doing a bunch of these off-campus jobs, which were considered illegal on an F1 visa, which is student visa, and working in perfume parlors and delivering KFC chicken and delivering pizzas in order to support my education. But somehow I was always focused on cracking the code when it comes to becoming an investment banker. And almost every single weekend, I would find myself in a conference in New York where I was never invited to, where I
Hmm.
was not on the list. I was barged in and just pretend to be someone that who is sort of from a privileged school and shake people's hands and like ask them for their cards and ask them if I could talk to the people in the company who could give me a job. And that's something I did for almost a year and a half to 2 year period. And it was one of these instances where at a Deutsche Bank conference I met a gentleman. I wouldn't want to name that person, but he said, I am at this investment banking institution which does TMT deals in Boston. And by the way, man, who the hell are you? You're not on the list. What the hell are you doing over here? You shouldn't be here. And yeah, I was just so motivated, and just to have an opportunity to talk to someone who was in a banking institution was put a huge smile on my face. And always preparing behind the scenes about how to get into investment banking. And I think for 15 minutes, I gave him some tids and bits of my limited knowledge of the investment banking industry based on Wall's Guide to Investment Banking that I had crammed page to page, word to word. It's like, who the hell is this guy? He's not supposed to be here. He's talking like a banker. Let's give him a chance to have an interview. And so that's how I got my first real break in a company which was a bulge bracket bank, which wouldn't even come to our university campus. Even William Patterson is such a small university, not even FedEx comes to hire over there. So I always knew I had to go out in order to create these opportunities. And yeah, they gave me the offer. It was like a huge, I would say, relief at that point of time for me. But they gave me the offer for an investment banking intern and in a summer internship at the peak of the financial crisis in 2008. And
Oh wow.
I, at the end of it, even they said they liked me a lot. we just don't have any offers to give out to people at this stage. We have fired 3 analysts during the summer. Unfortunately, we're downsizing. You know how the markets are. But keep in touch. We'd love to see you in the future, but we can't hire people for at least the next 2 years. And so I did not get a full-time offer. And I graduated at the end of 2008, and like a bunch of other things that I could have done, but somehow my mind was always stuck. This is what you want to do, Vishal. This is why you came to the United States investment banking. So I went back to India actually in 2009, brokenhearted, without getting the investment banking offer that I wanted so badly. And I worked for a year in a company called Tetra Tech Infrastructure Consulting. It's a Pasadena, California based company which was doing advisory work for public-private partnership projects in India at that point of time. In India, also things were not that good. The only sector that was hiring was infrastructure, because the government was spending a lot of money on roads and highways and bridges, etc., to kind of spruce up the economy. Government starts spending more money when the GDP is going down. And so that sector was hiring. I worked there as a financial analyst for about a year in Delhi. And every single day, I would just think about how to get back into banking. That was all I used to think about. And yeah, it came about through a common connection, and I had an opportunity given to me for an interview in Goldman Sachs in Bangalore. And even before that, I mean, I had literally been on the list of do not send email list of probably thousands of investment bankers in India at that point of time, right? Like spam their inbox because I wanted to be in banking. Nothing happened. But then opportunity opened up with Goldman Sachs in Bangalore, where this was a team that would support a US office. And they told me, this is you've been a star candidate during the interview and we will give you the offer. You bugged us very clearly and let us know that you want to be in the United States, but let us make it very clear to you, never ever in the history of Goldman Sachs in Bangalore has anyone made it to United States. It has happened once in London. And I had selective hearing at that point of time. And I said, did you say it has happened once in London? Good enough for me. I'm going to make it happen from here and go to the United States. And went to Bangalore, started working with the US team, and woke up at 9 o'clock in the night, was up till 12, 1 o'clock in the afternoon, absolutely every single day, always doing models that I was never asked to work on, always commenting on clients, making my managing directors look much better um, than what the clients thought at that point of time. And then, yeah, all of a sudden, these guys took notice of me and said, who the hell is this idiot sitting in India, in the wee hours in the morning and in the night? Let's bring him over and let's see what he's made of. And yeah, within a 2 to 3 month period, they tested me out in San Francisco and gave me the offer to come to Goldman Sachs in San Francisco in TMT, Technology, Media, Telecom, the single most prestigious investment banking group in the entire world to crack into. And that's how my life changed. And it started on a completely different career. It didn't come easy. It wasn't a straight path. I didn't go to Stanford. I didn't go to Harvard. Went to a very small school. And through just sheer perseverance and determination, the opportunity opened up. But I had to persist for a long period of time. And when I was in Goldman in San Francisco, I was like so proud of myself, now finally in investment banking and doing so well. And I thought I'll be a career banker, probably get into private equity. I was doing deals like BMC LBO, which was acquired for $6.5 billion, doing M&As and IPOs. Like the path was set to be a banker or do private equity stuff. But I truly believe in destiny. I truly believe that sometimes things that you're meant to do choose you versus you choosing them. And uh, after about a year and a half, I got suddenly put on a transaction that completely changed my life. And this was a company that everyone's heard of today, but at that point of time, it was a very obscure company. And this was Uber. And this is before Uber had become Uber. It was a very small company. They only had raised a Series A round. They had been rejected by more than 95% of the VCs in Silicon Valley. And not going to take names because these are some of the best VCs and I admire them for what they do. But one VC, one famous VC said, uh, Uber is a company that's marked by a high degree of regulatory uncertainty, not a company that we would like to invest. But for me, it was very different. I was looking at it from a first principles point of view, a guy who knew nothing about venture capital, who knew nothing about startups. And I looked at the history of the person, Travis Kalanick, who was starting the company with the co-founder Garrett Camp. And I looked at the person and I looked at his history. I think he had done something in high school, came out, started a company. It failed, didn't work out, didn't even go to college, I think. He went to his parents' garage, was there for a couple of years, persevered, came up with an idea, started a new company called Red Swoosh, which was a content delivery network that was acquired by Akamai for $300 million. And his story was folklore, a person who didn't give up in adversity, always persisted, and came out with flying colors towards the end. And this is the new company. He's revolutionizing the space of private transportation. And so I looked at the company very deeply and obviously did a lot of analysis and user cohort analysis, etc. But I think what inspired me towards going deeper and deeper into this company and doing diligence and creating signals and creating proof points around why this company would be successful at the end of the day was the founder of the company and his story. And Goldman ended up investing $5 million in the company at a very reasonable valuation, which I can't quote, at the Series B stage. And they went public at $80 billion. Today, it's a $180 billion company. It was probably one of the most successful investment deals that Goldman has ever done in their lifetime. And that completely catapulted me towards the world of startups and venture. And I forgot completely about what I wanted to do before. And this had to be my life ever since then. And I think what you are internally is what you attract externally as well. And I got invited very soon to come on board as a manager in the corporate development team at Salesforce, where Salesforce in 2014, 2015 was a very small not a small company, but it wasn't the $200 billion company that we know today. Market cap was in the range of $30 to $40 billion at that point of time. And they had a lot of early success. It was kind of the synergy of all eyes in the enterprise SaaS world, but they didn't have everything structured together. They had a corp dev team. They didn't have a venture arm. They were looking to invest some of their balance sheet cash. And I got invited and they said, we forward some of the things about you and go ahead. Let us know what you think about from a first principles point of view, what we should be doing, what is strategically relevant and important for Salesforce. And it was the start of, I would say, a brilliant career at that company as well, where I completed 6 investments on behalf of the company. One was Aptus, another was MuleSoft, Informatica, Livefire, Steelbrick, and Velocity. These are all software companies, data integration, AI companies, which aligned with one of the 5 strategic verticals at Salesforce: Sales Cloud, Marketing, Platform, Analytics, and Services as well. And when I made these investments at the very start, um, I had no clue what these companies are going to become over a period of time. I just wanted to do a good job and be diligent and honest and ask a lot of questions. I know nothing. I even today, I look to invest in spaces, I know nothing. I just had that opinion that I know nothing. And I need to learn from people around me. I need to learn from the spaces that I'm looking to invest in. I need to learn from entrepreneurs who I'm going to talk to. And then I will create definitive views. But when I start, I know nothing. And I just kept on talking to people. And there's a story actually. Um, when I joined Salesforce, the head of the corp dev team, I won't like to name the gentleman, said there is a conference coming up. It's called Dreamforce, which is Salesforce annual conference, which gets like 150K to 200,000 people from all over the world who come and become part of this, platform of Salesforce and benefit through contacts and partnerships. Every company that wants to get an investment or want to get acquired from Salesforce also comes over there. And so the head of the corporate team, before going to Dreamforce in 2014, said everyone needs to come up with 2 candidates, either investments or M&A. And I was told afterhand that this is something that's told to us every day. No one really cares. But I took it to heart because I was a new employee and I wanted to prove myself. And I started talking to every single product team at Salesforce. And the sales cloud people said the native coding capabilities of Salesforce are extremely primitive and a constant source of customer complaint. And going in to Dreamforce, I knew I had to find a CPU company, which is configure, price, and code. And I talked to every single company at Dreamforce, Model and Calidus, Selectica, Aptus, and Steelbrick, and fell in love with Aptus. Again, I did a lot of diligence afterwards when I came to know about the companies, but I clearly remember what catapulted me towards the Aptus investment was a demo that was given to me by an engineer who knew nothing about me. I knew nothing about him, on the floor of Dreamforce, where he walked me through how the CPQ solution works for a client of Aptus, which is Global Foundries, which is a fab company, a semiconductor fab company. And it was a fabulous, fabulous demo that I'd seen. And based on the diligence over a period of time, not getting into technical details, we ended up investing $36 million in the company, which was the single largest check that Salesforce had ever made till date. Before that, they were doing $2 to $3 million checks, just coming in as a strategic investor alongside financial VCs. We led that round, largest check in the company ever in the history of Salesforce, and got acquired by Thoma Bravo for $2.1 billion. And all the other companies have got similar stories, which I can share, but it was a very satisfying stint at Salesforce where I experienced for the first time, freehand and things that I thought were truly strategically important. And Salesforce is an amazing company. It gives you the platform to express yourself in case you prove during the interview process or while you're working, where you can develop skills, and in case you have the right expertise, they go ahead and trust you. And once people place your trust in you, I've noticed you act differently because you have obligations, you have responsibility. You do not want to lose their trust. You want to do the best possible job. And it's not about micromanagement at that point of time, right? Like a lot of people come to you and they're your bosses and they like tell you do this, do that, do that. I think that significantly inhibits the performance of an individual. The right way is to hire right people and give them your trust, and then you see how they perform, and their performance will be 1.5 to 2x better than if you would tell them on a daily basis what to do on a minute by minute basis. So that was Salesforce. And post that, got into a VC fund called Blumberg Capital, where now I was expanding into all the other aspects of B2B tech, in addition to enterprise SaaS, where Blumberg was very strong in the Israeli ecosystem. They had done some amazing deals in the United States as well. They were a very early investor in Nutanix, a hyper-converged infrastructure solution for enterprise data centers, and that company was about to go public at $4.5 to $5 billion. They were early investors in Hootsuite as well, which is a social media management platform where Blumberg made more than, I think, 70 to 80x on that initial investment. And so I was looking at security deals. I was looking at IoT deals. I was looking at all the other aspects of B2B tech, fintech as well, that I'd never been exposed to. An entirely new world opened up. And venture by its very nature tends to be, I would say, less controlling, where because you don't have more than 5 to 10 people in a VC fund, and there's so much work to do, no one's going to manage you. You need to manage your career, you need to manage your investments, you need to manage everything that you need to go. So you're basically your own boss in a VC fund, and I absolutely loved it. Absolutely loved the experience at Blumberg Capital with David and Bruce. We had quite a few investments there as well, and bunch of these have done exceptionally well. Two of these companies went public. One is Braze, the other is Double Verify. Braze is mobile marketing automation. They went public at $8 billion. Double Verify went public at $5.3 billion. And there's a bunch of others as well. But let me actually share a story. And this is about, I think, again, escaping the herd mentality and listening to sort of the intuition in you, where I respect my intuition a lot. I don't always go with it because it has to be verified with actual data points.
Mm-hmm.
But the belief system is to respect your intuition, because it is not based on, excuse my language, something you're just shooting out of your ass. It's actually based on conditioning that you've had, things that you've seen, things that you cannot consciously process, where summaries of things that you've worked on, which is impossible for you to remember because we have a small brain. We don't have neural like right now in our heads, is actually stored in your subconscious brain. And when you have this instinct, when you have this intuition that something like this is going to work, it's actually based on data. It's not based on something which is magical or mystical. So you have to respect it, but you in the current scenario also validate everything through data. There was a company called Double Verify. It's an ad tech company that does ad viewability, ad prominence, bot detection, and brand safety solutions for large brands and agencies.
Mm-hmm.
And in 2016, the world of ad tech was extremely compressed. Not a lot of people wanted to invest because this was considered a scam industry. As a brand or an agency, if you're a retailer, you're a big company, you invest $20 million towards publishing ads on various websites and mobile applications throughout the world. No one knew where the ad was going.
The
It could be
attribution.
a bot. No one knew. Exactly. Attribution was a huge issue.
Yeah.
It could be a bot that could view your ad. It could be that your ad is being placed on a pornography website or a website that harbors terrorism.
Hmm.
It could be that your ad is placed right next to that of a competitor, right? It's called ad prominence. Or it could be you get charged for an ad which is just a small pixel on the screen versus an entire ad. These were all very prevalent use cases. But even in 2016, the largest tech companies in the world were companies that were making money from advertisements, Facebook and Google. And they were doing it because everything was super transparent. You knew exactly what it is, where it's going to be published, who it's going to be published to. And so I had this notion that there are these issues 100% in world of ad tech, which is why the valuations are compressed. Everyone wants to stay away from it. Before I came into Blumberg Capital, Blumberg was already an investor at the seed stage in Double Verify. And the deal came to the investment committee. Everyone said no. They said, what the hell? And the deal was basically a secondary sale of founder equity. And Blumberg had an option to take it because they were on the cap table. And they said, who the hell in their right mind would even try and invest in a company like this, which is in an industry which is known for scam and fraud? No one wants to invest. Ad tech companies are valued at 2 to 3x. SaaS companies are doing 7x, 8x, right? 10x sometimes as well if it's a Salesforce competitor, a Salesforce-like company. Ad tech, no, it's a waste of money. We've got so many more amazing opportunities. And I was like, and I had looked at the financials of the company. I was very close to the company at that point of time, and they were registering, I wouldn't say excessively superlative high growth, but they had stable cash flows, and they were reporting 10, 15, 20% growth year over year. And I said, there is a narrative here which is not working in favor of the company. But the rationale for investment is clear cut. They're solving every single issue that is plaguing the world of ad tech. Ad viewability, which is whether your ad is small pixel, ad prominence, whether it's placed right next to that of a competitor, bot detection to prevent bots, and brand safety so that your ad is placed on legitimate websites.
So it's
And
like a sell side provider, right? More so than anything.
they integrate with SSPs, exactly, sell side providers, in order to throw
Yeah.
out their solution. And eventually they also were starting to work directly with brands and marketing agencies. But yeah, most of the initial customers came through SSPs. And so they did this, and I was like, it's a clear-cut value proposition. If you solve the issues and the ad tech, the opportunity is Google-like, the opportunity is Facebook-like. These are the largest tech companies in the world. And this is the company that is ameliorating all of the issues in the world of ad tech through their solution. It's a no-brainer for me. You should take their equity and send the signal that we are extremely confident of the prospects of this company and they are going to do well. And against all odds, Mr. David Blumberg listened to me and he did take up that offer. And since that point of time, I would say things changed, things happened, and I'm not going to take all the credit. Of course, this is just one small thing that you did, and it's all about the company and their execution and what they were doing behind the scenes. They got a majority offer to get acquired by Providence Equity Partners, where they took more than a 50% stake in the company. And even at that point of time, I told Mr. David Blumberg, do not sell the company. Do not sell your equity stake. This is a company that has the legs to go public. You're going to make at least 3 to 4 times compared to what you're going to make right now. I know everyone's going to press you to take liquidation, right? It's so much easier. 7 years gone down the road, reach 50 to 60 million. Now you get a liquidation offer. Don't do it. He didn't. He held on to his equity, and the company went on to go public at $5.3 billion. And yeah, it was one of the best, I would say, examples that I can give of, I would say, listening to your intuition when it's extremely strong, but also simultaneously, validating it with actual experience, what's happening in the industry at that point of time, and data.
But
Yeah,
there was
so it
also
was a
so
great.
much trust. You also had built up so much trust in the relationship where he valued your opinion on that and your intuition.
I didn't know if he would do it, but I think sometimes what I do is I act as if people trust me and act as if it is my responsibility and my obligation and not as an employee of a company who's getting a paycheck and you get a bonus at the end of the year and a little bit of equity in the carry. That this company, this organization, not only stays afloat, but becomes the best possible version of itself. And I don't think he at that point of time I can I can confidently state, because I don't know his internal makeup that much, but I cannot claim that he completely trusted me. But I always acted as if this is my company.
Mm.
Sometimes to my own demise, but I would always act as if this is my company and this is my investment decision, and if this is my money, and I am not going to make a bad decision or make a bad advice just to kind of let things by, and because I'm just an employee. I know that was valued immensely. uh, Trust came in when the decisions that I had communicated to them and they went by those decisions resulted in a high amount of profit. But when I was claiming or telling them this is what's going to happen, I can't say at that point of time that fully, completely would trust me. And that's natural because I'm just very new to the company, and they've been doing this for 15 years. It's their firm, it's their organization, and I'm acting as if this is my company as well. And I would always act like that, and I would take up that responsibility. And that is what they did appreciate. That is definitely something they did appreciate. So that happened. And then post that, I decided to do my own VC fund. Um, and my history, as I told you, I came from India, and it seems like there's a bunch of these successes that I can quote over, and a bunch of deals at Salesforce and a bunch of these investments at Blumberg Capital that are doing exceptionally well, companies getting acquired, going public. But behind the scenes, there is a struggle which cannot be explained in a short conversation. But the struggle is the struggle of a person who comes in from a very underprivileged background. I wouldn't say very underprivileged, a bunch of people who are just basically hand to mouth. But to get to the point where I had an opportunity to even invest in some good companies took me two times, you know, two times more years than someone who would come from a more privileged background. And to even get those next jobs, I didn't just have to, in these interviews, prove to them that I'm good, but I am at least 3 to 4 times better than the next available candidate, because they have to sponsor my visa, they have to do my green card. That's a big additional responsibility, and who the hell wants to deal with it? So you had to be superlatively better than everyone else. And I had always this instinct that I want to create a fund which obviously is inspired from the experience and the passion that I have, which is venture capital and supporting startup companies and helping them scale in ways and in shapes and forms that you know uh, justify my presence on the cap table, justify my presence as a board member of these companies. But simultaneously, I wanted to make sure this happens from to every single entrepreneur who is capable, who is skilled, who has the expertise, and who has the right experience as well. And I knew I was an exception, and I got lucky. And I'm not going to make, I just got lucky. I just got lucky through certain outcomes that happened in my life. And luck's not always going to be in the favor of entrepreneurs in different parts of the world, and even in different parts of the United States. You have people who are in Missouri, in Kansas, you have people in Austin, Texas, in Florida, in New York, Idaho. There are a bunch of states in America that I don't think are considered to be prime investment targets. Ohio is another example. North Carolina, South Carolina. These are all places where you have some of the best people, very smart, amazing universities, um, and they have accumulated experience. But just because it's a label of a state which is not considered to be a prime investment target, you don't see the amount of opportunities you would see in other parts of US. And this is a story that repeats itself outside of the country as well. And I know how difficult it is for people to scale their dreams in case they belong to or are from such a place. And for me, it was about making sure the venture capital fund is about maximizing its returns, creating higher than industry alpha returns. That is a given. Without that, nothing's going to work. But the ethos and the vision is to create a level playing field for global entrepreneurs, no matter where they are, in the US and outside of the United States. That is the ethos of the fund. And that was the inspiration behind starting PanCosmic Capital. So it's an early stage venture capital fund, predominantly with a focus on B2B tech enterprise startups. And the areas we are investing in are AI, big data, SaaS infrastructure, cybersecurity, fintech, mobility, and IoT spaces, and also verticals of clean tech, climate tech, retail, healthcare, as well as financial services. And the fund tries to marry various, I would say, what are considered to be orthogonal outcomes or initiatives. It doesn't have to be that if you're making a lot of money, you have to ruin the planet. You can do both things simultaneously at the same time. And in fact, that is what the beauty of the fund is. The fund is about creating a decentralized environment where it's not a local, it's not a centralized, it's not a fund that looks to be exclusive to privileged entrepreneurs and privileged people from various kinds of backgrounds, which is how generally I would say the world of venture capital works, which is very local and very centralized and not very inclusive. This fund is about decentralization. This fund is about inclusivity, and this fund is about only a single thing which helps us accomplish these orthogonal goals, which is returns as well as creating a level playing field that is focusing only and only on merit. And it's a deep diligence based investment process that focuses on a whole bunch of attributes: the product of the company, the investment thesis, the UI UX, the having conversations with a whole bunch of people in the network of these entrepreneurs, the advisors, the partners, and the customers, knowing about the go-to-market and financial strategy, understanding competition and better differentiation analysis, and then validating this through industry experts and not just one person who can be biased like me. And so it's about creating merit through a thorough and a streamlined approach, which I have specialized in. And then it's about not at all caste, creed, religion, gender, color, and nationality. It's only about merit, and the person can be anywhere in the world. Can be in the US, can be in Silicon Valley, can be in Missouri, can be anywhere in US outside of the United States. The only thing that matters is the merit of the company, which we establish through a deep diligence-based investment process, which centers around a core and a granular investment thesis. And as long as the merit is established, we're going to do well. We're going to do well in terms of our returns. We're going to do well in our ethos as well, because I believe no one ecosystem in this world has some sort of a special attribute through which they can claim that they have the best entrepreneurs. I think if you only focus on merit and you say you have a globalized approach, what you're invariably going to end up seeing is an equitable pie chart in terms of the distribution of the some of the most distinguished entrepreneurs in the world. And that is what we are doing at PanCosmic Capital, creating higher than industry alpha returns and creating a level playing field for global entrepreneurs as well. And in fact, if you have a globalized approach, the returns tend to be significantly higher, because the moment you step out of the non-top of the hierarchy tech ecosystems, valuations plummet and fundamentals improve, because these people have to have 1 to 2 million in sales. They have to have 3 to 4 million in sales sometimes to attract seed and series A investments. And they sometimes give you these investments, these deals come about at valuations of what are considered to be very unreasonable in some ecosystems like Silicon Valley, like 20, $25 million. And so not only does it align with our ethos, but as far as I can tell, it is the best investment strategy to implement as well. So that's what the fund is about.
And do you typically concentrate a lot on the operational side as well when you're working with these businesses, or is it more so like a board seat, advisory seat, and just let them kind of keep iterating and innovating internally when you make these tickets?
Yeah, so our ethos is VC as a conduit, not as a governor. We're
Mm.
not a VC that'll just come in and state that, hey, you know what, I'm on the board. Let's come and report to me on a quarterly basis what the hell you're doing. And if you're not doing well, I'm gonna, badmouth you, not gonna get investment from me or any of my investment partners and contacts. We don't do that. It's about sitting on the board as an extension of the employee workforce of the company and understanding what the diligence process helps us understand every single nuance of the company. And it's about being, once you sit on the board, behind the scenes salesperson, product person, business development person, marketing person for this company, and also help them attract the right employees, the right board members, which can be extremely and significantly advantageous in case you hire the right people for propelling the company in a completely different trajectory. So yes, it's about learning the nuances of the company and being there for the company at all points of time. And at no point of time is it about controlling the company. There are no egos involved. The it's about amplifying the existing vision of the entrepreneur. There's some VCs who also are helpful, but they have their own notion around how the company should work. Like they come on the board and be like, this is the way things are to be. I'm the boss, I'm the chairman, and CEO, sir, you need to listen to me. Otherwise, I'm out of here now. That's not what it is. You do your diligence. There has to be a complete alignment between what you want and what the company wants. And as soon as you come on board, it's your job to amplify the vision, amplify the capabilities, amplify the skills, and amplify the branding of the company. It's not your vision. And you need to be very clear about that. In case you do the opposite, you're going to damage and destroy the company. And there's a bunch of VCs who've done well in their careers as successful entrepreneurs, and no complaints there. I think it helps. But sometimes people come with an ego and try to grab the company and push them in different directions, which is not the right attitude. It's about them, not you. You're a helper. You benefit if the company benefits. So you should do everything to amplify them. Of course, check them, help them think through things in case there are certain failure patterns that they are aligning with that you've learned from your past experiences. But ultimately, it's always the decision and the job of the CEO, and you need to remember that. So it's about, yes, helping them with operational expertise, but at no point of time assuming the control. The driver is someone else. You're just the fuel.
I've got two more questions. The first is the exact opposite to the second. So the first question is, when we look at our portfolio companies and whenever we're looking to find a new company to invest in, what we found is that, USP, ICP, competitive advantage, all the financials, whatever it is, it's all nice, but having a very, very good relationship with the founder based on trust and the ability to like go out and have dinner that same night after a work day has been the most important factor. Like having a founder who's motivated and driven and wants to move the ball forward. How do you, like, at scale and at size, kind of figure out who's worth investing the energy and resources and time into and not?
You're absolutely correct. So, first of all, there needs to be a sense of controlled comfort, because as a board member, you are professionally engaging in sometimes disagreeable conversations as well, which is healthy. And every good organization tends to have a healthy appetite for disagreeable arguments and conversations, because otherwise you're never going to learn anything new. You can never expand in directions that you're supposed to expand, and you'll never be able to think about things that you haven't thought of before. And no one is perfect, not me, not the entrepreneur, no one else. So there has to be a sense of controlled comfort. Comfort is to be there. So you, after you're done with the meeting, you should have still enough, I would say, um, juice, camaraderie juice remaining in the cup to say, you know what, this is over now. Let's go and have a drink and grab dinner with each other. So the comfort is important, but it's controlled comfort. Um, no one's your friend. Everyone's in a professional engagement. So you have to remember that as well. And on top of it, if you become great friends with these people, then it's cherry. It makes your life a lot easier. It makes the life of the entrepreneur a lot easier as well. But the expectation is not that. The expectation is to find people that can be invested in, and that was your question. And to your point, I guess there's so many things that people look at. Everyone's different in this world, and people tend to have projections around who's going to be successful, and most of the times it's reflected or inspired from their own conditioning and their own life experiences. And so probably what I look for is something who is in a mold of what I've experienced, or at least some of the traits that I think I have. I don't know if that's for sure as well. um, but I've tried to keep myself quite unbiased about these things. What I'm looking for in an entrepreneur, of course, if they're doing well and they have skills and they have succeeded and they've get a great resume, they've sold a company in the past, that's all amazing, wonderful. That's all an added advantage and an added plus. By no stretch of imagination is this the single most important thing that I'm looking for. What I'm looking for are entrepreneurs who've got true inner steel, who are persistent and perseverant and determined in absolutely any environment whatsoever. Who have some sort of an issue with status quo. And that's reflected in some stories they might tell you. They're like, I just don't like this. I want to innovate on this. I want to improve upon this. And for them, it's almost unthinkable to be just grounded and being conditioned in the way things are in the space that they are looking to innovate in. They're always looking to propel the industry in which they are innovating forward. And that is the most endearing trait. How do you react under stress? What's your relationship with status quo? How do you plan to innovate in the industry that you're looking to innovate in? And once you have these questions and you spend some time with the entrepreneur, there'll be few, not everyone, who just are, come up with flying colors. And because when you look to scale a startup and you're looking to build a company, you can plan all the things that you want. Like for me, I can do the best diligence that I want to do and go and be so granular in my investment thesis, but no one knows the future. If someone tells you that they invested in a company because they knew 100% they're going to succeed, they're lying. No one knows the future. What I know is that there will be many periods of uncertainty and many unknown ups and downs where you won't have a clue what the hell is going on in your life and why did you leave your $1 million job at Google and do this, or why the hell after selling your last company for $100 million you put the next 20 million and you could have retired so much easily with a beautiful wife and kids in Malibu or in Monaco. You chose to do this again, right? When you do this, you need to do it for the right reasons. And we're in search of those entrepreneurs who are in it for the longer run, and who feel truly inspired to propel the industry forward in which they're innovating. And so those are the kinds of entrepreneurs we like to find and invest in, besides all the regular checklist things. You should have an the successful exit and like $1 million plus job, and would have scaled a tech company for 10. Sometimes the best entrepreneurs have nothing, man. Like Mark Zuckerberg, if you look at his profile, like what? He didn't even complete Harvard, dropped out. Steve Jobs, what profile did he have when he started Apple? So I don't go by the narrative always. I'm a safe investor, tend to be conservative, but the idea is to always keep an eye for exceptions, because they are the ones who truly create these innovative outcomes over a period of time. So those are the kind of people we like to invest in.
And how do you think about executive presence in that context?
Meaning people who've been C-suite executives, etc., or
Or
senior
just the
board members.
personality, like that type of leadership personality where people feel like, okay, everything's going to be good now, or like there's more
So,
confidence and morale.
so David, I think entrepreneurs evolve,
Mm.
um, and you're not going to get everything that you want as a pre-IPO investor, growth equity investor, and early stage investor at the same time at an instance when entrepreneurs are about to start their journey. Um, People evolve, and sometimes you can see if they will evolve comfortably or they will not. And it's a judgment call, but you're not going to get at the early stage someone who is polished and polished to the extent where you can see them being the CEO of an IPO company which trades on NASDAQ at a $10 billion valuation. But I have seen remarkable transformations in people where they started off as these guys who would just like throw around things and joke over beer, and just couldn't even speak a single word in terms of professional etiquettes. But I couldn't believe my eyes and ears when I saw them ring the bell at NASDAQ, because they were completely different personalities. So people evolve. Um, so I don't hold that against people, entrepreneurs, if they cannot be completely convincing in their, I would say, so-called external and behavioral leadership capabilities. But you spend time with people, they'll reflect those capabilities without having the skills to reflect those capabilities. Those are two very different things. Being a leader by example and doing things the way they should be done is different than reflecting that you are an amazing leader. That second thing can be learned. Anyone can teach you that. But some people do have a trouble transforming and they get replaced. Happened with Uber, happened with a whole bunch of companies I've supported as well in the past. Um, so sometimes that's just a natural, I would say, transition that needs to happen. But as you're looking at early stage entrepreneurs, you're looking for real inherent leadership traits where they lead by example. They can be, because as a startup entrepreneur, you're not going to have at the seed and Series A stage throne where you can call the shots with 100 employees. You're working with someone who is probably as new as you, and 5 to 10 employees to start with, maybe 15. Hopefully you get 20, 25. It's a larger round. And so you're wearing a lot of hats, and your leadership at that point of time is to not be an asshole, not to be a king, not be on a throne, and participate, inspire people, get into the weeds of things, get them to understand the value of what you're doing. The passion is what actually manifests and attracts people like a moth to that person. And you can sense that when you talk to people, but they might not always be extremely poised and polished where they can give interviews, on CNBC and Bloomberg.
Yeah,
But as I said, and you give them 4 to 5 years, the people who are really motivated will pick up these skills in a click of a finger. So that's not what I'm looking for.
I love that. This is great. How can people find you if they want to reach out to you or if they want to learn more about PanCosmic Capital?
Yeah, I mean, I think the best place and the easiest way to connect with me is LinkedIn. Very active over there, and most people contact me on LinkedIn. And if someone has a good idea, they feel confident enough sharing it on my email, happy to give my email address as well. It's Vishal, Vishal at pancosmiccapital.com.
Awesome. Awesome.